is Surya Sahan. Welcome to the Insurtech podcast, the platform to spread knowledge on insurance innovation, digital disruptions, and entrepreneurship. Our website, insurtech.com, and we are available on Spotify, Apple, Audible, and Amazon Music. Today, we will discuss on the topic embedded microinsurance, revolutionizing financial protection. And for now, I'm delighted to welcome our guest, Harry Cruden, who is the Chief Operating Officer and co-founder of MIC Global. Harry, would you mind talking a bit about your background, what motivated you to start MIC, and what brings you to insurance and technology?
Yeah, sure. And good to meet everybody. Thank you very much for giving us this time, and hopefully we'll give you some good insights into embedded microinsurance. My background is technology and insurance. So I'm kind of one of those rare breeds that comes from a technology company and then has kind of got into insurance and has 20 odd years, inside technology and insurance. So, a lot of depth of knowledge there. So, working in the insurance industry has always been a thing of mine that technology can play a big part in processing and policies and claims and actually to speed up the whole insurance process. And during my time of working in the industry, that's what I was always aiming to do. And then with the kind of advent of the gig economy and sharing economy and technology like mobile phones and machine learning and AI and all this. These are all things that help, with that journey now, and to bring it all together to actually make insurance processing and actually get it through distribution a lot cheaper. So about 4 or 5 years ago, I met Jamie Crystal's my other co-founder. He's the CEO. He and I were we met up, and I brought him this idea and said, "Hey, Jamie, we ought to get. I've been thinking about processing and putting insurance into high volume, low cost insurance policies. The time is right to do that now. We can embed it into these platform companies." And this is my idea. What do you think? And he said, "Well, that's kind of really funny because of he had just bought Microinsurance.com. So that's kind of really happenstance that we met together, both with a similar idea and a similar goal. So on that day, we set up Microinsurance, and that's morphed into MIC Global. MIC is a riff on the microinsurance company, so that's kind of really what drove us to do it. It's a mixture of technology, opportunity with new platform companies, and Jamie and I's depth knowledge of insurance.
It's very interesting, Harry, because microinsurance is a part of insurance which not quite widely being touched upon, and of course, post the COVID era, we are seeing more and more of utilization in the space. So I think it's a fantastic opportunity that you have targeted, and of course, we are seeing the kind of innovations that been coming up. So good luck with that to you and your team. And with respect to the discussion of this evening, I want to really touch upon how is embedded microinsurance transforming the way underserved populations accesses financial protection, and what are the key advantages of integrating it into everyday product and services? How are you seeing this progressing?
Yeah. So as I sort of said in my introduction, there's a lot of technology today, particularly around mobile phones and the way people access lots and lots of products. The products are digital. And there's these new digital kind of customer journeys that people have to buy all sorts of products. And insurance, traditionally is what we call a push product. Most insurance companies try and push the product on you. They want you to buy their product separately, and they kind of try to. It's not very customizable. it's standard, and they want to, and they try and tell you this is what you should have. Whereas a lot of products in that people actually buy are as part of a journey, part of a customer flow. And people pull the product. People think, "Oh, I want this product." Like, nobody wakes up in the morning really wanting to buy insurance products. That is true, I think. Whereas people do wake up in the morning and thinking that they want to buy a flight, or they want to buy a new computer, or they go and purchase something that they wanted to do. And this gives us the opportunity to allow the customer to embed our insurance into that customer flow, and building simple and relevant products to that customer flow. So, and a good example, obviously, is travel insurance. And during the customer flow of, let's say, buying a ticket, embedding a very simple, like lost luggage or late flight kind of travel product in that flow. It's relevant because of people are going on the plane, and planes are sometimes late. It's relevant also because people lose their luggage, and so as they go through the journey, as they're completing their journey and they're thinking about their flight, then the insurance is offered in that customer user journey. And they can pull that product. They can just click on it and say, "Yeah, I have that too," and it completes. They don't have to go somewhere else. They don't have to go and talk to a broker. They don't have to go to another website. It's all embedded in that customer flow. So this way of allowing customers to pull your products as and when they want them, during a relevant, kind of matching a relevant piece of insurance with a product, is the way we kind of think of building these embedded products. And this is really the advantage of integrating it into these services as well, and bundling insurance in with products. We have a product called which we call the porch piracy, and we embed that with these doorbells, and we can embed that sort of thing with like a mobile phone as well. So if you buy a doorbell, inside that product, our insurance is embedded in it. So it would say, so you'd buy a doorbell with like $1,000 worth of cover. So if something goes wrong with, if something happens to the packages, and the doorbell's looking after, the doorbell looks after the actual porch. People come along and they leave an Amazon package or a similar package, and then because of our insurance is embedded in with their service, that package is instantly sort of covered as soon as it's left on the doorstep. And if it gets stolen, then we pay for that. We give them the $80 or $100, whatever it is, for that package. So that's like embedding it within a physical device or a service that like that. And
yeah, no, absolutely. It's of course how we evaluate our opportunities to really solve specific needs of this generation today, right? And microinsurance being a very vital aspect of this industry that can really touch upon various aspects which we perhaps have not addressed 10 years back. So that's certainly a very beautiful example. So Harry, my next question is, what role do emerging technologies like AI or blockchain play in scaling embedded microinsurance solutions, and how do they contribute to improving customer experience and risk management?
Yeah, so it's kind of interesting, really. The technology is all about sort of processing and keeping the cost down. That's what it does. So if you've got 1 million, if you're trying to service 1 million bank accounts, for example, in embedding a small product inside a credit card, then what these days what you don't want is to have 250 call center staff managing that, and there's it's getting less and less need for that. With say an AI bot, an agent is now a bot, and the agents with the advances in AI technology now can actually they read the policy, they understand the policy, and then when you make a claim, you can ask it in natural language, but you can tell it all about the claim. And because of the agent, or the bot understands the policy, it can tell you and answer your questions around the claim. And these sorts of technologies obviously help with the multi-language, scalable, and don't cost that much to run. Certainly not as much as a 200-seat call center does, for example. And so this matches, if you're trying to sell a policy for $1, then the servicing of that policy needs to be a lot less as well. And that's really how we try and use the technology. We part of it is not just technology; it is the design of the product to match with the technology. So you can't have a really complicated workers' comp type program that then can be really managed fully on technology. Although there are bits of that program now, that bits of these things that are happening with AI. So AI is embedding, is building more and more into into these policies and into these sort of programs. But the key to it is to design the product well, and design the product so it is kind of that you can enable the technology around it to get the best out of the technology. So that's kind of what we do. We keep the product simple, have the technology, do a lot of the automation and servicing, and with the idea that it's kind of low touch or no touch policy and claims. And with the technology, that is possible these days. 3 years ago, 4 years ago, it wasn't possible, but now it is becoming more and more possible. And I think blockchain is going to be something else that people will start to use, especially around proof of ownership, proof of doing things, proof of sales and things like this, so that you can integrate that. Yes, that is my my car or my painting or my my whatever it is, because it's all recorded on the blockchain, which means that you can do things much more on the fly and much more around the way people kind of work and operate and want it. So most traditional insurance policies are a year long, whereas most people only want insurance for a very, very short period for a very specific thing. And you haven't been able to do that up until now. But with machine learning, AI, blockchain, these things become possible. So you can get insurance literally on demand for the thing that you actually want covered, rather than having to buy these kind of annual generic policies that you only use a piece of them.
Yeah, no, absolutely. And of course, how we are seeing AI, the way technology is scaled, particularly in the insurance sector, it's definitely interesting. And particularly, what are the use cases that's being developed, or being at least being seen as the most potential areas of disruption when it comes to AI and microinsurance? It's something that's really bring the real innovation when it really comes. How better can smaller risk also be addressed through technology, and where the insurers can step in to add value to such risk. And of course, I've heard we have seen a lot of the use cases that's been explored, and it's more interesting to see how each geographical region are trying to explore this area of insurance. For example, how being microinsurance treated in Asia Pacific. Some of the use cases that we have come across in recent times are even insuring a walk on your treadmill, right? Even some use examples of SaaS insurance. There's of course microinsurance as well. So I think these are the new phenomenon that we are really seeing that would really touch the the new generations look insurance in a much different way as the previous population or generation used to perceive as a product, right?
Yeah, well, that's definitely true. I think micro insurance, has been around a long time, but kind
Yeah.
of digitally enabled micro insurance is kind of a new thing. So,
Yeah.
like before, micro insurance was just like attached to a loan, a micro loan, and it was like part of the loan, really.
Yeah.
But that didn't really get the population to buy insurance. They got the loan, they got the insurance with the loan, and when the loan finished, the insurance finished. So that's not a very sustainable model from an insurance point of view. You want that policy to carry on, and you want to be able to sort of grow that. So we started, when I got into this, 3 or 4, 5 years ago, we always thought of, that we need to work with partners and platforms in order to have the relationship with the partner or platform over a long time, and then insure their customers for the little pieces of insurance that they needed. So if they got a handyman to come around, then that job would be insured, while that handyman's here. Or if you're going on vacation, that vacation is insured, that house is insured, or that bike you're using is insured just for the time you want it. And you don't buy a whole year's kind of complicated insurance policy that may or may not pay out a claim. People want today certainty, if you like, and they want to see that there are claims, if you like. So they want to see that yes, I am worried about the flight being late, or I'm worried about my phone, the screen getting cracked, or I'm worried about the delivery I'm getting next week, it being stolen from the porch because I go to work every day. These are things that they worry about, and these things aren't typically covered, under a standard insurance policy. And what it means is that the customers think of these policies in a much more relevant way. It's, yes, I want to buy that insurance, because it does my short term need, and it fulfills that kind of, I can now rest at ease, if you like, because I know that package is insured on the doorstep, or not, sort of thing. And things like having, we do a job loss program. And so if you're made redundant through your job, then you can get some cover. And this isn't cover for like a year or 6, like covering all your full salary, but it's just enough to help you get your next job. So it carries you through to pay the rent or keep food on the table for 2 or 3 months, and takes that worry away while you focus on getting a job. And that keeps the cost down. And these things are embedded in services like banking services, or subscription services that comes with credit cards and things like this. So it's, again, a relevant program when you're thinking about taking out a credit card or that sort of thing. And you can see that, you do worry about losing your job, or worrying about losing your income anyway, and that would be a good thing to protect. So you kind of pull that, and you have that that policy. And these aren't aimed at people earning 6-figure salaries. These are aimed at the every person, if you like, the average person, which they also find it very difficult to get these covers. So this is where micro insurance can really help. It brings the cost cap on insurance way down to make it affordable for everyone, not just wealthy people. If you've got $1 million home, you can easily get that insured. But if you've got if you're a gig worker or a low wage earner, then you find suddenly insurance is harder to get. And that's really where we aim our products, to make them affordable and relevant to those people.
Yeah, no, absolutely. That's a very valid point. And of course, this, after all, insurance is something that should be accessible by anybody, not just the upper middle class or the higher income.
Yeah.
So,
Yeah, no, definitely. I mean, insurance, when you actually break it down, it's a community product. It's like, imagine 100 people all getting together and making it and saying, well, we can all pool our risks, and if 1 or 2 of you get injured, lose things, die, whatever it is, then the community will look after you, and that is very much what insurance is. But insurance companies have lost that idea of community. I always feel it's a really good community product. If when you think about it, it's you're paying your policy. Yes, it is for peace of mind, but you're also paying to help out other unfortunate people in that community. And that little piece is sort of lost with the idea that I think where people think that insurance companies just rip you off and make money out of you, but we're trying to get back to a better sort of process where being relevant small insurance policies that people can feel much more of a sense of community around it and think of they are getting the peace of mind, but they're also helping other people because they're paying their little piece too.
Yeah, absolutely. I think apart from the profitability and the business aspect, insurance does have a key role to play when it comes to social well-being. So I think this kind of innovative products would certainly critical in those segments. So my last question to you, Harry, is could you share some real-world examples where embedded microinsurance has been successfully implemented, and what lessons can we learn from these use cases, for broader adoption in different markets?
Yeah. So I alluded to one earlier on, which is our porch piracy program, where it's embedded into a camera overlooking the porch, and it's about theft for products. That was implemented. It's been running quite a long time now, and been very successful for us. The lessons learned around that is that the pricing and the underwriting and the technology all needs to be flexible, working with a partner. You can't go in there and say it's X price and that's the end of it. You've got to be flexible and work within their cost structures, and also work with their customers. So that's a bit of a lesson. Is you got to listen to people first, sort of thing, and to design the product. And the product needs to be simple in design, and which makes the claim simple in order to make it effective. Another example is we were working with a large telco, and we were trying to sell a product, and it was like about $3 or $4 a month. The product was, and gave I forget what it was now, but I think it was about $200 or $300 worth of cover, and we couldn't. Nobody wanted to buy it, and so we thought about it. And then what we did is we actually made the payment through a digital wallet, so another piece of technology, and we made the payment kind of optional, so that people could pay as much as they wanted for it every day and make it available every day, and then we would take a little payment every single day through the month. And so we were looking, say, for $3 a premium to give $300 a cover, but what actually happened is that some people only paid $1, so they got like $100 a cover. Some people paid $2, so they got like $200 a cover. Some people paid, just half, 50 cents, so they just got a fractional amount of insurance as well. So we made fractional payments and fractional cover something that they could do, and the actual sales of that product, and the people who bought it at that time, it went from like 5,000 or 10,000 a month to 15, 60, and 70, and we got up to 600,000 people having that product every single month, and that took just over 12 months to get there. So really, from zero all the way up to 600,000 or 700,000 people to buy that product, and that was a change of that's both technology, being flexible, listening to customers, seeing what they want, and that enabled more and more people to have have the actual insurance that they needed. And then another example, which is our My Income product, is where we embed this into we embed this into a loan or a rental agreement or a banking agreement, and this is just linked in with an API and various bits of technology to check who you are, and we offer cover in the US like $1,000, $2,000, up to about $5,000 or $10,000, and if people get made redundant or lose their job for no fault of their own, then they can call on this. And again, this is a very, very successful product. In fact, this is our kind of flagship product that we sell globally. And it's either linked to your actual job loss, or it's linked to a stay in hospital, or some losing a limb or something, some medical condition. So we have a medical version of it, and involuntary sort of job loss version of it. And we can develop the claims, and we use AI and machine learning type technology to automate the claims in the background. So when people come on the claim, to claim it, it's paid out and made, and the money is made, wired to them very, very quickly, so that they can get on with their life. So that's our my income product. I got one more example if you want to. So we also have a weather example. This is in India, where we've linked this through one of the payment providers in India to all the merchants. So the merchants are people having the little card machines, or the payment gateways, the payment machines, and occasionally it rains a lot in India sometimes, and they get flooded. So what we've done is we've developed a program that measures the merchant's sort of average income, and then when it rains, if it rains to a certain amount, and their shop gets flooded or the street gets flooded, and people don't come, we then measure the next sort of 3, 4, 5 days of their revenue, and then we pay them. And then that triggers, if it drops below 25% of their normal earnings, then that triggers a payment to them to sort of bring them up to date. So when it rains, they don't lose income. That's the key for it. And that is an integration with payment provider and a weather modeling service that we have to give those to give that protection to those many merchants in India.
These are amazing global use cases, and it's a request that to the listeners that these best practices, these innovations from a global scale, where every geographic pockets where it's being implemented and showcased, these are something to be learned, and definitely try to see where the best of these products can be applied to benefit the masses. And I think that's what one of the main agenda where microinsurance plays a major role, not just with respect to business but to the society, right? So it's a great pleasure, Harry, discussing microinsurance and its benefits and how it can be best scaled at a global level at different scenarios and different types of risk that it can potentially cover. So with that, fantastic discussion, and thank you for your thoughts today. A true delight to have you as our guest.
Well, thank you very much for sparing the time, and to all your listeners, thank you very much. And I'm here if anybody wants to talk about it in person, just get in touch with me. So thank you very much.
Thank you, Harry. And last to wrap this up, you are listening to the Insurtech Story podcast, and see you at our next episode. Till then, take care and stay safe. Goodbye for now.